Hey, kia ora everybody, Chris Farhi here from the Bayleys Insights and Data team. We've got Gerald Rundle from our development land sales team. Have a quick chat about the latest situation in the development land market. So welcome to our makeshift studio, Gerald.
Thank you very much, Chris. Good to be here.
Yeah, cool. And so your sort of crew across New Zealand specialises in development land sales.
Correct.
How would you sort of describe that?
The development land sales covers all sorts of things, but right across the residential, industrial, and commercial sector. And talking both greenfield, redevelopment sites, brownfield sites. So it's really that whole spectrum of land development.
Yeah, and it's quite interesting because I guess within that you need quite a few specialist skills beyond what you'd see in traditional agency, right?
Yeah, well, we've got a team right across New Zealand, and within that team we've got ex-valuers, we've got ex-development managers, got a guy down in Hawke's Bay who's a specialist in planning. So we've got a lot of skills across the country and a lot of experience. So we feed on those as a team. So it's
cool.
very valuable.
And so jumping into the market,
Yep.
how's activity tracking generally at the moment?
I think development land sales is very much along the lines of pretty well all the commercial and industrial sectors. We've definitely seen a slowdown in activity, and that there's no exception for development land sales. That's happening. In terms of the inquiry level, I think we're not seeing quite the same level of unsolicited inquiry where people are just picking up the phone and coming to you. The market has slowed, so it really is a case at the moment of finding out about your developer, your builder, what they want, and making sure that you get in front of them and show them that the product that's right for them. In other words, putting the right product in front of the right person.
Yeah, because is it fair to say that I guess if you went back maybe 2 years ago, 2021, right, like things were pretty hot, and then the market these days, so I guess you need to be a little bit more targeted about how you get opportunities in front of people.
Yeah, and it is knowing your buyers. The development market is, there is a lot of specialists out there, and we know a lot of them. And so I think when a product comes across our table, we have a pretty good idea as who some of those buyers are going to be. So it's for us to get in front of them and present what those opportunities will come from that land.
Yeah, it makes sense. And are there any particular sweet spots in the market at the moment? I guess the one that comes to mind for me would be maybe industrial land versus residential land. Like, are you seeing things like that come through? Yeah,
look, I think bringing up industrial, to me, industrial's always been a sector that's never been so as volatile as some of the other sectors. So when we do go through a slower or downturn in the market, the industrial side of things tends to go through it quite well. And I think when you look at some of the major commercial growth areas around New Zealand, Auckland, Tauranga, Hamilton, those areas have always had a shortage of industrial land. So there's not many new industrial subdivisions coming through. Those that are get snapped up quite quickly. And if there is any existing industrial land in the market, that tends to be quite tightly held. So that industrial sector seems to push through that volatility quite well.
Yeah, quite interesting as well, right, in terms of the players that are active in that space. It seems just at sort of face value, different groups that take quite big holdings around the place, as opposed to residential where you might see, I guess, a wider range of people active. Yep,
absolutely, yeah. Those bigger projects, I think some of the larger development projects, those big distribution centres need a big chunk of land, and they need a whole lot of support around them. So, yeah, definitely. But again, on that residential side, we're also seeing in this market there's huge opportunity for developers who are well funded or have lots of equity to get in there, and we're seeing a lot of that where they're stepping in and they're securing their pipeline for the next 5 or 10 years. So in this market, that's a very good thing to do.
Yeah, and that makes a lot of sense, right? Because I guess particularly the housing market is reasonably cyclical at the moment, obviously a little bit calmer, but you can also see how with things like migration, rebounding, how there's going to be, persistent demand for housing.
Yes.
And when things do click into action, you don't want to be caught out with, I guess, no pipeline.
Yep. Yeah, and I think that some people have positioned themselves well for that.
Yeah.
You know, they're starting to buy land now, starting to get that consent process in play, so you know they'll be in a position to capture that upflow in the market in the next 12 or 18 months' time, wherever that happens, so they can be ready to go. So there are people who are looking quite strategically in that way at the moment. Yeah.
Yeah, and so that sounds like it would apply to, I guess, your large-scale land holdings. What about the more infill development and brownfield? Like, how's that tracking?
Yeah, it's interesting because I think policy out there at the moment is muddying that water a little bit. We used to have cross-party or cross-political party agreement around these new density rules, and we're seeing as we go closer to the election that those cross-party agreements have now separated.
Stir it up a little
bit. They're all separated, haven't they? So,
yeah.
and I think there's an issue out there that there's a little bit of uncertainty about what that future picture is going to look like.
Yeah.
And if you're a developer for that sort of high density stuff, where's that policy going at the moment? You know, if you're sitting here, you're probably a little bit unsure about what's happening. And I think that's also happening in the future urban sector as well. Big greenfield blocks that are around Auckland, for example, around some of the major centres. There is again the changing of policy about where they should go. You know, when they're going to be brought forward.
Is this like the highly productive land controls and things like that?
Correctly, absolutely.
Yeah.
And also just general policy. Some of the land that was future urban, the timeline for that's been pushed out. So people have bought expecting to get that into a zoned position is now being pushed out. So I think that's creating that uncertainty as risk, as we all know, and a lot of developers will probably take a wait and see attitude to a certain degree until that's a clearer picture going forward.
Yeah, it's quite tricky, right? And then the other area that's had a lot of media coverage has been construction costs, particularly over the last sort of 2 years. Big increases coming through there. When you start to think about that in the context of development land, I guess the layperson's or economist view would be, oh well, development land will just become cheaper, there'll be some downward price pressure. How's the pricing tracking for, I guess maybe residential and industrial bulk land?
Yeah, look, you bring up a couple of good points there. One of them is that I think there's sort of a number of forces at play here. On that construction cost side of things, the feedback we're getting from the industry is that's probably levelled off now. Yeah. That those big surges in costs have come through, and also the supply chain has sort of loosened up a bit. There's a few shortages out there, but generally, if you want material, you can find that now. I think the factor that's coming into play at the moment is cost of finance and availability of finance. Yeah. The finances out there are being a lot tougher. There's the ones that are lending to developers is becoming a lot tougher. The sort of due diligence that they're going through and the requirements that developers are having to meet. And I think what we're seeing is a bit what we're seeing in Australia, to a larger degree in Australia than we are here, but there's a move away from the traditional banking.
Like the non-bank lending.
Non-bank lending is becoming a major part of the industry now, and I think we'll probably see that trend continue. So it's I think there's a certain forces out there at the moment, but I think we certainly have seen land prices come away from the premiums that were being paid 12 years ago.
That makes complete sense, right?
It's not unexpected.
Housing market, commercial market, it would have to come through some way into development land prices.
Absolutely.
And then in terms of emerging issues or sort of new things that are starting to happen, are you seeing any things sort of tracking out for the remainder of this year? I mean, obviously the election's a big one.
Yes.
Yeah.
Look, certainly election is part of it. I think the market continues to work through that. People look through that. But I think when we have a slower market, we have a bit of uncertainty. It really does open the door for certain sectors to take advantage of that. And we certainly are seeing that in the retail side. Sites are opening up for some of these major retail operators, such as Foodstuffs and Progressive, will be out there.
Which is exciting, right?
Yeah, securing sites. Yeah, absolutely.
Yeah.
I think we're seeing some really good specialist guys. Guys who hotels and built to rent. They'll be out there looking. And as I say, on the residential development side, we've got parties out there that are securing large blocks of land, looking down 5 to 10 years down the pipeline of development and wanting to set themselves up for that next 5 to 10 years, and that's the time to do it. So the activity moves around; it doesn't stop. It just goes to different sectors. Yeah.
Yeah, good time as well to have that capital available to actually go hard and pick up some really good properties, right?
Absolutely, yeah.
Yeah. No, awesome. Well, look, with that said, we'll wrap it up here. But thanks very much, Gerald.
Yeah,
That was
yeah.
awesome. Have a bit of a chat about the market, and if you do want to get in contact with Gerald or the team, just where do we go? Bayleys.co.nz.
That's the one. Yep.
Yeah.
Okay.
Sweet. Awesome. Well, thanks very much, and we'll see you next time.
Thanks,
Ciao.
Chris.